Hello and welcome to BQ Prime. You're joining us in the special conversation with the management of Dabur India. The company has just announced its quarterly results, which was largely in line. Revenues up 6%, EBITDA fell 10%, and margins contracted sharply to 15%, owing to higher input cost, inflation, and other expenses. Profits, however, missed estimates due to higher depreciation expenses during the quarter because of acquisition of Badshah Masala. We now have with us Dabur India's Chief Financial Officer, Ankush Jain. Good morning and thank you so much for joining in, sir.
Good morning, Tessa. Good morning to you and all your viewers as well.
All right. So the operating margins have hit a multi-quarter low in Q4. I would like to know, how do you assess the impact of input cost inflation on margins, and have you been able to pass on the entire cost burden to the consumers, and what are your expectations in terms of how margins will trend from here on?
Yeah, thanks, Cesar. But before we straight away go into margins, let me give an overview of the financial results for the year. Overall, we crossed an important milestone of 11,000 crores. We touched 11,500 crores as our revenue from operations globally, which increased by 6% on an annualized basis, and in a constant currency by 8.2%. Important to note that both India and international business also on a 3-year CAGR are 10 to 11% growth, which means the business remains resilient. We are lapping over high basis of healthcare, and therefore both healthcare, HPC, and foods, it's in double-digit CAGR. This was the overall turnover related. Now coming back to your specific question on margins, yes, this quarter there was a margin contraction, but important to note that sequentially the contraction in our gross margins is reducing. In Q2, where our gross margins contracted by 350 bips when the inflation was at its peak till by December, now at least it has contracted by half of it, almost 160 bips. And in India, this contraction also has reduced from peak of 250 bips to 74 bips, which means that the inflation is abating, though it is still higher, and the mix of inflation is changing. Also in international, from the peak of 500 bips contraction in Q2 and Q3, the contraction has come to 250 bips, signaling that there is a moderation in inflation, and hence, going forward, we expect that over next year, we should turn favorable in gross margins at least. Now coming. Why this percolated down to even a higher contraction in operating margin? Because we have started investing back in our media and ad pro spends to generate demand. If you remember, till YTD December, our media was down by minus 20% or thereabouts, both in India and international. In Q4, however, we have started investing back and it is increased by 15%. And at a global level, against 20% contraction in 9 months, it is at least flattish. Plus, we have also, invested in a total ad pro, which is in line with sales growth. So therefore, you see contraction in operating margins. Our gross margins, the real parameter is actually, moderating. The contraction in moderating. Inflation is also moderating. Inflation also from peak of 12% in the quarter came to 9% at a global level, which is also a healthy sign. Coming back to our pricing, and were we able to pass on the price inflation impact fully? On a price to price basis, on a product to product basis, both in HPC and foods, our gross margins by and large were intact on a year-on-year basis. It is just that because we stepped up part of our consumer promotions and trade promotions and certain mix impact because of inflation, since consumers are down trading, that impacted a slight bit in margins. I think I've been able to overall, give a summary.
All right. So your volume growth has come about just 1%. Could you give us a sense of what led to this weakness, and also what are your expectations in terms of volume growth going as we, enter FY24?
Yeah. While the volume-weighted volume growth is flattish at 1%, however, in terms of actual cases, our case growth is 11% in the quarter and 14% on a full year basis. This demonstrates that we are selling more and more of products. It's increasing our penetrations. It is generating trials. But because since the sales of juices has increased by 30%, and hence the overall cases have actually increased by 11 or 14% on a quarter and yearly basis, which only means that our penetration is increasing. As an example, oral care penetration now has increased to 50%, which means every consumer, every second household in the country is having a Dabur Red paste. Likewise, penetration of other products are also increasing. And as I think the inflation moderates, we think that this will only lead to uptrading by consumers in mid to long term, and thereby continue to increase market share. While you see, value weighted volume flattish, but most of the categories we have actually increased our market share. Hair oils, we increased it by 130 bips because category is actually declining, which means we are growing faster than most of our competitors. Red toothpaste also we have gained market share by 40 bips, even the category is declining. And in fact, oral care has become number two brand in the country, and number one in certain states as well. One sec, sorry. Yeah, and number one in certain states as well. So, while overall cases are actually growing and penetrations are increasing, and we are continuing to gain market share as well, which demonstrates, the company's execution in terms of going to more and more consumers, going to more and more trade partners, more and more retail outlets is working fine through our efficiencies. But yes, because of inflation, consumers are downtrading, which leads to overall reported volume growth to be flattish. But cases are actually and the number of transactions and number of eaches is increasing quarter on quarter. Yeah.
All right, so got it. Sir, it's been a few months since you have acquired the Badshah Masala brand. So how are you planning to scale it up? And also, how much do you expect this business to contribute to your overall sales?
Yeah, so Badshah, I think we are very proud of this acquisition, and this was the first quarter when we integrated this into our financials. We expect this business to grow by 20% or thereabouts on a year-to-year basis. It is still operating in majority in Gujarat and western part, Maharashtra and western part of the country. With this acquisition, I think we can leverage our distribution, Dabur's distribution. We can go to more outlets, we can go to more stockists, we can go to more trade partners, and bring efficiencies in the distribution system, both between Dabur and Badshah, team. Even the CEO of Badshah now, the executive management managing director and CFO has been nominated from Dabur's team. So therefore, the best practices which we follow will be replicated both in terms of processes and also we think in terms of sales. Plus, also as we scale up, we will tie up with more and more e-com players where we think we can scale this business further. So we are positive, though there seems to be some margin pressures in the Badshah Masala category and across because certain herbs and spices prices increasing. But I think as we hear, most of the competitors are taking price increases and we should sail through that as well. But top line, we think and we are confident that we should increase at least 20% on a CAGR basis for next 2-3 years. Plus, what will happen with our international presence in Middle East and US, we will also leverage those geographies and eventually also bring it, expand it in certain other geographies, even within India, southern India and eastern India as well.
Okay, so coming to the categories, we have seen that oral care, skin care, as well as the health supplements, they've all recorded a decline in sales during the quarter. So now that the COVID base is finally fading off, what, according to you, would be the sustainable growth rates growing forward for all of these categories? And also, how do you plan to stay relevant in the healthcare space, given that the demand for health care products are also kind of slowing down?
Okay. So first of all, some basic facts. While all our three businesses, whether HPC, healthcare and foods, both on a quarter basis as well as YTD basis, on a 3-year CAGR, HC and HPC have grown by 10% CAGR, 3 years, and and foods by 20% or thereabouts, which means fundamentally they are growing. Plus, also they are gaining market share quarter on quarter and year on year as well. However, yes, because of inflation and moderation in category growths, there was sudden stress in the quarter and last part of year. But we are growing faster in most categories, than the market. As an example, as I said earlier as well, hair oil is very competitive, but we still gain 130 pips. Red toothpaste, number two player in the country, 40 pips gain. Odonil and Odomos, again growing by 20 odd percent in the quarter. We have gained 140 to 200 bips market share. Odonil 140 and Odomos 200. So there are gains in market share as well. Uh, there are gains in market share. However, category pressure were there last year because of inflation. But now we are positive that with inflation moderating and consumers which were more downtrading more will come back, and will start consuming more of higher packs, and therefore it will lead to higher consumption as well. Also, coming back to your specific point on healthcare, while healthcare, I think this was the last year of high overlap basis, but still on a 3-year basis, as I said, we grew by 10% this business. And healthcare, the focus of the company will remain strong. We have just recently, recruited Mr. Philip Hayden, who was the CEO of healthcare, which clearly demonstrates our intent that we would be highly focused on this category. We are making certain restructuring within our healthcare, like conversion from allopathic, Ayurvedic to allopathic, increasing our therapeutic range, going to more and more doctors, going to more and more chemists to drive availability and awareness. So we are pretty confident that healthcare, which is now lapped over a very high base of COVID, is now on a normal base and therefore should grow in line with HPC or even marginally higher. The foods will be the main driver and which will grow at a much higher rate. But we are now, quite positive on the three business units, at least in the next year, with inflation moderating and consumption coming back. Plus, also, we think that with the election year, the government impetus on infrastructure will increase, which will put more and more money as disposable income in the hands of consumers, and therefore, things should only improve. It's only a matter of time.
All right, fair enough. Thank you so much, sir. It was pleasure talking to you.
Thank you so much, Cesar. Pleasure.